Hello everyone, this is Drew from Best of Us Investors working with Mark on the Platinum Trading platform. As you may know if you have been a subscriber on the channel for some time now, Mark, who has been successfully investing for over 40 years and warned us to get out of the market in 2021 November when the market was at its peak, is now helping our subscribers on swing trades, analyzing more than 1,000 companies each week based on the 10 indicators, is now helping our subscribers on swing trades, analyzing more than 1,000 companies each week based on the 10 indicators and sharing the ticker symbols of the stocks that are set up for good uptrends every day, along with weekly Zoom calls for Q&As with the members. So if you might be interested in our service, please make sure you check the link in the description below. Now, there may be people saying that they do not see the value of analyzing charts and the best way to invest is buy and hold forever. Now, that may be a good strategy for a number of great stocks where you could buy and hold for a very long time, if not forever. But even for these great companies, it is very important that you do not overpay when buying them in order to get high returns on your investments. And in order to find these critical levels to buy in, chart analysis can be a great tool. Now let's hear from Mark why he thinks chart analysis is important and why investors that know how to read the charts may be less distracted from news and events and make better trades and investments.
I like to get out before a particular company if we're actually in the position before earnings because I know that's a market condition coming. The only thing I don't know is how it's going to affect the stock. So I would rather be out with the profit on the top side than risk earnings coming out and seeing a dump down 12% in one day, because that kills you as a swing trader. You can wait and get back in at that point, wondering if it's going to go back up. But a lot of times you'll see the pattern is if it doesn't go up, it drops down whatever percent, and then it goes sideways for a while, trying to determine where to go. So it's better to get out, take your profits. But that's a market condition. Now it just seems like everything is a market condition. It wasn't too long ago. No one cared about the beige book. No one cared about the CPI. No one even knew what a PPI was. No one cared about the unemployment numbers or the jobless rates or the jolts or any of that. None of that stuff ever mattered. And now we live, on the edge of our seat, waiting for reports that people don't even know what's in them, but from time to time. And then month to month, they come back and they revise them. So they're not even right the first time. And we're making decisions based on these market conditions. So it makes it more difficult because, again, in swing trading, we're looking at numbers, and we're looking at numbers that are based on averages, basically, and showing us trends and momentum. But technical analysis doesn't know about PPIs, and technical analysis doesn't know about FOMC meetings. So that's where we got to get in there with our own brain and say, okay, this is coming up. Is this going to affect the position I'm in? Should I get in a position? Should I get out of a position? What am I going to do? And that's when you can go look at kind of the charts, and they kind of give you an indication. And so this is the daily chart. So here was Tuesday. You can see we're trading in kind of a parallel band of the Bollinger Bands. This is an intermediate resistance level. And now you see that the 9-day has come up and hit. And for the last 2 days, we're under the 9 and under the 50. And we've been playing this game with the 50 for a while on the S&P. And now we're down below it. And you can see the 50 is acting as a resistance level also. When we go down, we can see the MACD for the SPY, which is tradable, is sliding closer to the signal line based on what you can see in the histogram. We already had a crossover stochastic. And again, I use the stochastic as an indicator of where future movement of the MACD is. And now, it doesn't always work that way, but majority of the time, from my experience, it does work that way. And then you're seeing our momentum down here. We're right at the 50 level. So, medium momentum, we're still heading down. The stochastic looks like we're rolling over on the MACD. Again, these are just things that you look at. I'm like, what's happening with the SPY? It doesn't look like it really knows what it wants to do, but it looks like it's going to trend down for a bit. And again, you can come down, hit this Bollinger Band, and just range trade for a while on the S&P.
So as Mark was saying, the charts do not know about major events such as the FOMC meetings or when the earning calls are coming out, and are purely dependent on numbers and patterns from the indicators. So charts would help investors stay away from emotions and be more calm when negative news comes out, and be able to determine their buy or sell prices more rationally. Now let's take a look at a number of trades that Mark has shared with our Platinum members this week based on his chart analysis.
This month, Microsoft, we got in back in the end of August at about 322.98, and it went up and we sold a half a position, okay, on the 5th of September, which was Tuesday, for about a 3.32% gain after 8 days. It hit a sell limit above the resistance level, and resistance level moved from day to day and time to time because of all the averages moved. So we took profit of half the position of $536 on that. We're still in half a position right now. and you can see it's gone up to 334 now. So we're up about 1177 a share on 50 shares right now. And so it's not actually $1,100 to be half of this, because this is based on 100 shares, but so, a little over $500 there. So, that would bring us up. If we sold right now, we'd be at $1,200 for the first week of September just on Microsoft. Here's Microsoft. Here's where we put it on the watch list, and it was back here end of August. We went up, we took a half position off up here, and you can see it's still climbing. It's above its intermediate resistance level. It kind of wicked up a little bit of where we're going to find some sell orders, and on the top of the Bollinger Band. You could take another profit, take that profit out, which I may do, or you may let it run, because I'm still looking down here. We're still ahead on the MACD. We're having just a little bit of a crossover on the stochastic, and our momentum's still up at 57. But basically, you could take this other 50% off, take your $600 and pack it up for the weekend, and have a nice little profit of $1,100. You have some sells up here, about 342.27. We're at 334. But again, it's hard to get past these resistance levels, and especially when all your moving averages are also, they all converge right here. There's not much of a trading pattern when they all converge. You just kind of bounce from side to side. Again, it's a higher price stock, so this could represent $10. But in this case, I'm looking at kind of a weakening MACD. I see a stochastic rolling over. So for Microsoft, we could pull a trigger at any time and get out and take profit. Or if you think you can go up and catch some more up to 342, if we can get past, that's an extra $8 on that, just based on your risk tolerance. This white line represents that we're above the 200. You can see we had a close above the 200, and this is where we put in, okay, we're waiting for a retest of the 200. What we want to do is see this next day stay above the 200 at a closing price, and it actually did. And then you can see for the next 3 days, we've had upward patterns on Regency centers. We came up here today and we wicked up right here where the stop limits are. We've left sell orders at 64.72. Again, you use these basically if you want to sell. If you're in the position, you might put a half a position or all and get out at that point. We're also seeing a Bollinger Band coming down and meeting right where you're seeing these stops. So a lot of the traders will see that, and they'll put, that's where they put their stops. We're above the 50 for the third day. So that's good. We have a upward rising 9-day moving average. We're above the 200. We got a MACD that's still rising away from the signal line based on the histogram here. A little bit of a rollover on the stochastic, but again, when you get up into the 90s, you're going to have flat rollover kind of stochastics. And we're still up at over 60 on the RSI. So, there's some room to the upside. The support will be here at the 50. We'll have a little, at least today, this will change on Monday, but we have a little bit of a room to run up. People up here probably put in their stops and took the stops, and then that beat the price back down, but we're still doing fairly well on Regency. Beam was going pretty much sideways for a while and then dumped. Then we went sideways for a while again, and the 9 came down, and we just played with the 9 for a while. And you can see same thing with the MACD. We kind of went slow on the MACD, and then the MACD is starting to break out really slow, and you can see the histogram is getting away from its signal line. We're still under the 200. We're under the 50. The Bollinger Bands have come down and compressed and converged. Well, they converged because the volatility was lower. Now you're probably going to see these expand out a little, but you can see how we hit the Bollinger Band here today. Again, we're hitting that Bollinger Band. It's acting as resistance. We've got support down here at the 9 and the 20. It's just something to look at. We're still under the 200. This could go on or under the 200 list. Probably will. You still see some support, strong, upward movement on the MACD. The RSI is kind of flat around 50, so the momentum's kind of still flat. But we need to get past this upper Bollinger Band, and then we have stop limits up here at 26.35. We're currently at 25.35, so that's $1 above. But again, these Bollinger Bands will give us areas of resistance too, which is helpful for us as traders.
So with that, if you are interested in these swing trade updates, daily ticker suggestions, educational content, and live Q&A with Mark on a weekly basis, make sure you join our Platinum member in the description below so that we can make it through this tough market together. Thank you very much for watching, and I look forward to meeting you all on our Zoom calls.